So your closing date needs to move either up or back. When do you call your lender? Well, let me tell you, Tara Ryan here, and today's tip from Tara is about exactly that situation. And what I want you to know is if your closing date's moving, talk to your lender. Specifically, if you're going to delay the closing, let's say there's been an issue with inspections or there's some type of repair and you need more time for that to be completed prior to closing. Maybe the seller has just asked for more time and wants to delay the closing to give them a little more time to move out. Whatever the situation is, talk to the lender first. So when we lock the loan, we lock it for a specific period of time. And what you may not know is that we can lock it for certain time amounts, and the different lock periods cost different amounts. So if your closing is in 14 days, because I do a lot of fast closings, then we might only lock that rate for 15 days. Why pay more to lock it for longer? Most commonly, loans are locked for 30 days. It could also be 60 days or 90 days, but the longer the lock period, the more expensive the loan. So we lock it for just the amount of time that you need. If you go beyond that date, then we pay lock extension fees. This is important. Those fees apply even if current market rates are lower than the current rates. Well, why would that be? It's because when lenders lock in a rate, remember what we're doing for these buyers. We are guaranteeing that rate to them at the closing table, no matter what happens in the market. Things go crazy out there and the general interest rates are 2% higher than when you started. They're still guaranteed that rate when they locked. So that's a lot of protection for your buyers from the volatility and the changes in the market. Well, how do lenders do that? How do you guarantee interest rates on millions and millions of dollars for the borrowers that are out there? Well, they hedge it. They spend money in what's called the secondary market. Basically, they buy an investment that moves in the opposite way of interest rates, so that if rates improve and they would make more money on the loan, they make less money on this investment. Another way to look at it is if rates get worse, so now they're losing money by honoring your buyer's lower rate, and the lender's now losing money on that deal, they're making money on the other investment that they bought that moves in the opposite direction. The idea is so that lenders make about the same no matter what happens in the market. So when you need a longer time period, that lock extension fee is in play regardless of what the market conditions are. And that can be hard for people to understand. So I need you to know the benefit to the buyer of the lock is it protects them from volatility. And if there's going to be a change in the closing date, always talk to the lender first. It's important for you to know how much is it going to cost. If it's a day or two, I'm probably going to be able to just cover that for you. But to give you an example, a 30-day extension is a big deal. It costs about 50 basis points. And so to give you an example, that's like 0.5% of the loan amount. So if they're borrowing $400,000, a 30-day, a full month extension would cost about $2,000. So it can be a big deal. Obviously, that scales down if you only need 5 or 10 days. We generally do lock extensions in 5-day increments, but each lender is different on this. This is not a complete standard. I'm just giving you an example and just a rough idea. What applies with all lenders is the closing date matters. It matters if you move it up faster because the lender needs to know to change all their timelines. Okay, so certainly keep them in the loop, even to bring a loan up earlier in the process. And if you're going later in the process, find out, hey, when does this lock expire? And how much would it be to go this many more days? That fee then can be paid by the buyer, could be paid by the seller, the agent and lender could kick in. Like there's all kinds of ways we can deal with that cost. But the real thing is let's not just willy-nilly move the closing date without having that conversation. So hope that gives you a lot more information about the importance of the closing date and how it relates to the lock of the interest rate with the lender. And as always, we are here to help with any questions like this or anything else you need. And before I let you go, remember, we're here 7 days a week, 777, 7 a.m. to 7 p.m. every day of the week to help you and your clients. Looking forward to hearing from you.